I think we're ready to call the meeting to order. We have a very big agenda, so we're going to move fast. I understand that Board Member Peretti was called back to work. And Board Member Gibbs let me know she's in another meeting and she's on her way. So, or she would be coming on her way, but a little bit late. So, if we could please call the roll, Treasurer Behort.
Absolutely. Chairman Hudson.
I'm here.
Board Member Peretti.
Here.
Wow. I just got done saying you were here.
Sorry, I got it done quickly.
Great.
Mr. Hemphill.
Oh,
No, not here. Board Member Gibbs. Ms. Zaranen.
Here.
Mr. Johnson.
Here.
Mr. Robinson. Here. You have a quorum.
Very good. Thank you. Okay, very good. Well, thank you everyone for being here today. Good.
I just told her you were coming.
I was able to get it done.
Okay.
Work and
I'm sorry.
apologize.
Very good. I know, I just got done saying it, so.
The Finance Committee in the House is going through their process, so everyone's sort of scrambling right now, so I apologize.
So I'd ask everyone first if you could turn to the minutes from our last meeting. And first, let us know does anyone have any questions or comments on the minutes? Very good.
My name's Jody versus Judy.
Oh, okay, let's make sure that's fixed.
Thank you.
There's a typo.
Let me get mine. And Kevin's name is spelled wrong.
Okay.
Got those circled.
Any other comments? Hearing none, is there a motion for approval?
So moved. Second.
All right. Any discussion? All in favor, please say aye.
Aye.
Any opposed? Okay, motion carries. Next, we'll turn to the fiscal year 14 audit report. The Auditor of State completed their audit, and Tiffany Regenbaugh is here she's our lead auditor from State Auditor's Office, David Yost. And so Tiffany will provide, this report was provided to the Audit Committee as well as the board. We want to make sure the Finance Committee was looped in so that, so she'll do an abbreviated version of the other presentations she did as well. Tiffany, thank you for being here today. Thanks.
All right, I passed out a little packet as well with my own little mini agenda. I was also asked just to kind of touch base a little bit on audit requirements and the process in general and the process as it specifically relates to the district. So we'll cover those two items before I get into the actual audit report and management letter for this year. For the audit requirements and process in general, basically there's an Ohio Revised Code statute that requires audits to be performed. Some audits are annual, some audits are on a biannual basis. In the case of the district, just based on size and other bond covenant and single audit requirements, you guys have an annual audit.
And Tiffany, we're required, just to clarify, we're required for the Auditor of State, so we can't go out and get another auditor.
Right. The revised code requires the Auditor of State to perform the audits. Now, the Auditor of State does have the option, because we obviously cannot audit every government in-house. We do have the option to contract out certain audits during the year, but it's based on staffing hours and risk, and we do take preference of the client into consideration because some prefer to be in-house rather than contracted out. So that's an in-house decision. It's not a decision made by the district on who performs the audit. And then just in general for the audit process, every engagement is different. So we go in each engagement, we take a look at the financial statements and their activity, and we develop a plan to determine what cycles we're going to test, what internal controls we're going to look at, and what other items and compliance requirements we're going to look at for the audit. It's based on materiality, but a lot goes into materiality. We have to bring in risk assessment, and again, size, nature, if there's any other inherent risks, or if a fraud risk or something of that nature is brought up, we have to take that into consideration as well. Additionally, one other important thing to note about an audit is we do not look at 100% of transactions. It's done on a sampling and analytical basis. So we go in, determine where the risks are. If there's a higher risk, we'll look at more. If there's a lower risk, we'll look at less. But it's definitely on a sampling basis and not 100% transaction review. And overall, the purpose of the audit is for us to opine on your financial statements at the end. We're going to determine whether you get an unmodified clean opinion or maybe a qualified opinion if we find material errors. In the past, the district has always received an unmodified or clean opinion on their financial statements. Now, specifically as it relates to the district, since the district is on a fiscal year, we come in normally around July, and we have to have the financial part of it done by December 31st, since the district presents a CAFR, which is the comprehensive report. And then we normally finish up late December, early January with the federal portion of the audit, and the federal portion of the audit is required to be completed by March 31st of the following year. Just some other things in general with the audit process. It's a lot of back and forth with us in the district, a lot of working together. So as long as we come in, make requests, and the requests get to us timely, the audit goes pretty smoothly. We haven't really had too much issue in the past, and we've kind of found our way to be able to communicate with the district to get the things that we need in the end. Any questions at all on just the audit requirement process or as it relates to the district before I move into the report? All right, the packet I provided with everybody is an abbreviated version of the report. I didn't print the whole CAFR because that's about 300 pages, so I just did the report package piece and then a copy of the management letter. So I'll just briefly run through it with you. The first thing you'll come to in the report package is the schedule of federal awards. This is included for the district in particular because the district exceeded $500,000 in federal expenditures. If the federal expenditures would have been less, you wouldn't see a federal schedule and you wouldn't have a federal single audit either. The next item in the report package, page 5 and 6, is the financial report on internal control and compliance. It summarizes whether we found any material internal control issues or material compliance issues with financial. Pages 7 and 8 is the same type of report, but for the federal side. So it's if we found any material non-compliance or material internal control issues with federal. Then the next piece in the report is the actual schedule of findings. I'll kind of touch base just a little bit on each finding. Findings 1 and 2 are connected. 1 is a financial finding that happened as a result of a federal finding just due to Ohio Revised Code compliance that happened to tie in with one of the federal requirements regarding student attendance reporting and withdrawals and such. The crux of finding 2 is touched on page 14, kind of the middle bullet points. For the funding we tested in 14, the way the funding is set up for your Title I special education and Title IIA. In 2014, the funding received is based on a calculation of maintenance of effort performed in 2013. That 2013 calculation relies on student data from 2012. So the student data we actually tested and are reporting on here is from 2012, not from 2014. So the issues that are bulleted out there where we couldn't find support for certain withdrawals is related to 2012, not 2014. The next item in the report is in regards to time and effort certification. So basically that's how, for federal purposes, for payroll charges to be charged to federal grants, they have to use time and effort certifications to track their time. We had one employee for the Title IIA grant that was certified to the Title I grant instead of Title IIA for $56,000. Because the dollar amount is greater than $10,000, it automatically makes it a report comment because $10,000 is the threshold for question cost to be in the report. The next finding is over school allocation. This one specifically relates to Title I school budgeting. There was one school who overspent their school allocation by $24,786, resulting in a question cost. Again, because that amount exceeded the $10,000 threshold, it's a report comment. And the final item in the schedule of findings is over special education creative availability. There were 3 obligations for a total of $24,627 that were after June 30th, 2014, and they were charged to the 2014 grant. Basically, with period of availability with these grants, the money has to be obligated by June 30th, 2014, and then liquidated by September 30th. Since this wasn't obligated till after June 30th, 2014, it should have been charged to the 15 grant versus the 14 grant. Any questions on any of those findings?
No, but I think I just would like to make sure we highlight, so the clean financial audit, some control issues, and you'll see the corrective action plan. The audit committee has worked with the district, so they'll report. So the subject matter folks are reporting to the audit committee on their efforts to go over that. And when Tiffany's done, I might ask the internal auditor to speak to that as well. So.
Okay.
So the findings on A133, are they significant, and does that provoke a response from the feds?
Anytime there's a question caused, technically the feds are able to come after the district for those monies back. I've not ever seen it happen, but part of the federal filing process, once the federal audit's complete, the district has to file the audit report with the feds. So they all get a copy of this report. So it's their prerogative whether or not they want to actually come back against the district to collect those funds. To my knowledge, they haven't ever come back against them.
But that would be the only action.
Yes.
So any additional questions on the audit report?
All right, and as Mary Jo just touched on as well, the last piece in the next to last piece in the audit report, pages 19 through 20, are the district's corrective action plan. Anytime we have a federal finding, it's a requirement that the entity provide a corrective action plan as to how they're going to work to correct that issue. So that's what this is. It was all completely compiled by the district and provided to the district. We just include it as part of our report. The last piece in the audit report is our independent accountant's report on applying agreed upon procedures. This relates to the financial side for compliance testing. The anti-bullying laws that were established a few years ago and that have subsequently been amended several times. Each time they're amended, we have to take a look at the district's new policy to make sure they amended it in line with the law. So this report is just noting, if you look at bullet 2, that the board amended their policy and that the policy now meets all current requirements of the revised code. So unless they amend this law again, you won't see this AUP report in the report again until they would happen to amend the law again. All right, the last item I have to go over is the management letter. The management letter is items that we found during the audit that were immaterial to the overall audit, so immaterial to the financial statements, immaterial to the federal programs, but we felt that they were important to bring to the attention of management. I'm not going to go through every item in the management letter in detail. One thing I will point out for your reference, any item that has an asterisk beside it, it means it was a comment in the prior year management letter as well, so it's a repeat comment. I was basically able to take a look at our comments and kind of put them into 3 groups for you. The first group is relating pretty much to student activities, athletics, and then subsequently to timely depositing. We take a look at the athletic and student activity handbook and control procedures that are in place, and we just check to see if the controls that the district has are functioning appropriately out at the schools. And as a result of some of those controls and the way that the deposit schedule is set up, we also found issues with some of those types of receipts not being timely deposited. And each of those comments has bullet points that kind of summarize the items that we looked at. The second group of comments in here are federal related. We had a period of availability comment related to the Title IIA grant, so the same type of circumstance that we just talked about with special ed in the report, but this was a smaller amount, so that's why it's in the management letter. We also talked about the time and effort process It was nothing that was non-compliant with federal law. It was more of a timeliness issue with timeliness, getting them completed, timeliness, updating the unit system. And then the final federal one was relating to Title I and how the monies are allocated with the buildings and the timeliness of those monies getting spent for the grant year they're awarded rather than being carried over to the next year. The final group of comments are IT related. We actually have a special division within our office that comes out and performs our IT audits for us. So they take a look at your computer processes and your security and all that type of thing and make recommendations as they see necessary. They had recommendations regarding some of the application security, confirming user accounts, and overt access request procedures. Unless there are questions on those comments, I'm not going to really go into detail on anything in the management letter. Any questions on those items?
Just in terms of the Finance Committee and reoccurring items, what's the thought process?
Well, I think that was an issue. So it's come up through the audit committee, and I think maybe we should kind of decide who should hear what, but I would suggest that there's a remediation plan now on how the administration, would you like to speak to that? Mr. Superintendent?
Yeah, swallowed incorrectly, I'm sorry. I didn't bring a copy of it.
No, not to go through it, but my suggestion would be, so the administration has put together a detailed remediation plan. My observation, this is just mine alone, is there were a number of those repeat items. We had reviewed that last year, and that was when I first started on the audit committee. It appears that there was more attention paid to sort of the lowest hanging fruit, but there's still, it's a multi-year process to complete the
some of them are more systemic that need.
So right, so it's in process, but we're not there yet, and I think there's a commitment to that. And what I'd suggest is that maybe, in a couple months that we do a follow-up on the remediation plan and have that follow-up report come to the Finance Committee. And so you can you could see that and review. We could review what's been done and progress.
Sure, I think that's a good idea. I always got alarmed if I got a minus on any of my grades, so we met the next day after the last time we read these results and have met repeatedly since then to determine what's occurring that requires that systemic adjustment. And so we do have a number of things that we'd be happy to share that I believe will result in a cleaner audit the next time.
And I would also, we started out just right off, and we've been working on the budget. And so I think after we do that, maybe as a committee, we evaluate what else comes in front of us periodically. One of those things I think certainly would be to have the internal auditor share, their kind of scheduled reports and just an overview, so we're not duplicating efforts on committees, but we're also the left and right hand are talking to each other. And that's where I think it's so valuable to have, make sure we hear from the auditor of state, well, this is fresh, and that so the Finance Committee is looped into the efforts as well. If that sounds acceptable to everybody. Is there anything, Carolyn, you'd like to add?
Just from a historical perspective, a lot of progress really has been made on addressing the report comments and the management letter comments. I think when I first started, both of those numbers were double of what you're seeing today. So a lot of work has been, and effort has been done by the administration to address, the issues. And we still have work to do, but it is being made for every report comment, for every management letter comment. We do have a corrective action plan that has a specific date of when it is anticipated to be, implemented, and a process on her as far as who was responsible. So it's an ongoing, even though we have this report, the work really starts, after this report is issued, and we know, what has to be done and what effort has to go into it. So, and that does come before the audit committee periodically as far as where we are, what work we still have to do. My staff does go out and work with the process owners as far as is the remediation plan on target, and does it appear that it's going to actually address the issue, and if not, we recommend tweaks. So it is a collaborative effort between you know, the entire district management as far as addressing these issues.
Great. Mr. Treasurer, is there anything you'd like to add at this point in time?
It has been covered.
Very good.
I'm good.
Very good. Well, thank you very much for coming in today. There are no additional questions? Okay, very good. Thank you so much. Okay, so we'll move on to the next portion of our agenda, and that's the community school update to address some questions the committee raised. Dr. Michelle Klein is here. I think where's Dr. Klein? Is Dr. Klein here right now?
Yes, she is.
Okay.
I say I rode the elevator down there.
Oh, I think Tiffany forgot her jacket.
Uh-oh.
Oh, okay, good. Okay. And welcome, Board Member Gibbs. No, it's fine. Well, you've heard some of this, you know, those pieces. It worked out great. Well, we could, oh, boy. Think she's close?
I would imagine.
Well, should we, we'll wait 30 seconds here. The next report is just very long, so. Pardon me?
Do you have the handouts for that?
I don't believe so.
We could sing. We could.
You've not heard me sing.
You lead us.
Alicia wanted to get her. I believe she may be making copies.
You could do the
Why don't
financial report.
why don't we do the financial report while we're waiting? So,
You
we'll
want to
skip
jump down to the
down.
March report?
Let's skip down to the March report, and we'll turn it to the treasurer.
Is he here? Oh. So for this discussion, we'll be looking at two documents in your packet. One is my green bar report. The other is the management discussion and analysis. And I would begin by saying this has been a very interesting couple of weeks while there. Do you want me to go ahead now?
Yeah, let's just keep going. She can catch her breath.
Okay. There are obviously many moving parts, but they seem to be moving a lot faster here the last couple of weeks. So this was, I wrote this at one point in time, and since then, other things have changed. And as we get into the 5-year forecast discussion, that was written a little bit more recent. So, but hopefully this all ties together. So as we look through the month of ending in March of this year, our year-to-date revenue variances are listed there, and I'll just briefly describe where those have come from. Primarily in general property tax, that has to do with the ongoing delay in receipt of settlement from first half, and of course that all started with the computer programming change down at the Franklin County Auditor and Treasurer's Office. We anticipate that to rectify itself. What day is today? The 16th? Well, we thought it would be rectified yesterday, but I don't think it has been. Is that correct, Mike? We've not received settlement.
Correct.
So we got our fingers crossed for this month. Well, they have to settle eventually. I know that. So it's coming, but I can't guarantee when.
It's hard to make that guarantee the day after tax day. So.
Yeah, there you go. If we go to page 2, talking about the state aid lines, 2 lines there, probably the item that caught our most attention over the past couple of weeks was a change in the calculation of our state funding dollars. And I say just a change in the calculation, not a change in what we receive, but in a change in how it's calculated. And in a nutshell, up to this point, the Ohio Department of Education has been using last year's enrollment numbers. Now on the March number 2 payment, and again on the April number 1 payment, they began using what's been reported by us and by all the school choice option schools. They factor that into the formula, and what you see on page 2 is what came out. Now, I did it for March 1 and March 2 payment. That's what I had at the time I was writing this. That's that table there that shows you the changes. right now, when I get into the 5-year forecast, I've brought that up to date with April, so we are as current as we can. That would be the April 10 payment. But be that as it may, the point of this, I've highlighted line J to show you that our calculation changed in terms of category. And you can see, for instance, line A, the opportunity grant, dropped. But to offset that, I guess you could say, line D, the economic disadvantage funding, from a calculated basis, jumped up as because of the result of using the new enrollment numbers. What's interesting is that this formula, the way they figure out how they pass and how they allocate the actual dollars we get by category, is that they start at the bottom at the total. And you can see our calculated amount now is a little over 360 million. But we're capped. We can only go 10.5% over what we received last year. So that equals 275.5 million roughly. Well, to get what they give us, so, how we account for it, is that they simply take the 275 and prorate it back to the various lines based upon the percent to total of the calculated amount. So that's why under the state funding column under changes, you can see that they just changed pews. There's still the same number of pews in our church. That's all we get. That's caused an interesting cash flow issue for us, actually somewhat to our benefit. But what we get this year in terms of them helping out with the cash flow, they take back next year. So it's about $6.6 million cash flow variance. That's just a timing issue, and it's an oddity that comes out of how they calculate monthly. The point being, our calculated aid, what we're getting, didn't change. Drop down the line V, which are the transfers and adjustments out of what we refer to as the deducts from our foundation. Those are the expense items that we memo post. They have jumped. On this payment, they're up a little over 17 million. And we'll talk about the April payment later. And there, you can see categorically down there which items jumped. So the new enrollment and the changes to the categorical has changed some of those costs. And we now have, unfortunately, Board Member Gibbs, it was a bit of a surprise. But I don't know how many, I don't know that enrollment number until they tell me. And that's what they did. So with that in mind, I talked in kind of ad nauseum about what's going on there and the cash flow issue. But all in all, we believe the state funding line will be up close to $7 million. But that's because of the just the $6 million or so in cash flow differences that we're seeing. That then comes off the line for next year. So it's going to cause a little bit of an aberration, but not a big deal. So that's it for state funding, at least on the revenue side.
The transfers and adjustments, what's the relevance of that number?
Those are our expenses. So we actually incur that as an expense. And the point of that is revenue didn't go up and our expenses did.
To other parties, so that's relevant to us. And is that what we projected, or is this?
It's above what we projected.
So that's material to us.
Yes, it is.
To the tune of?
Right, in that analysis, to the tune of $17 million.
Okay, so that's real money that we're not retaining.
That is correct. Part of that lengthy discussion is some of that will be mitigated. As we've said before, some of our expenses, like personnel-related expenses, are coming in under. I don't believe we anticipate advancing out as much as we might have originally planned. So from a cash flow standpoint and impact on the cash balance, it will be mitigated. And I'll get to that in my projection for fiscal year 15 later on in this report if we could wait, and I'll pull it all together.
Okay.
Okay. Other revenues are currently $3.6 million under plan. I have delved into that a little bit deeper. I've learned more and more about Medicaid reimbursement than I ever really wanted to know. What I thought wouldn't be repeated actually will be. There are several years worth that you get some up front and then you get it somewhat in arrears, so they'll come back in. But all in all, after that analysis, this line item is expected to run about 1.8 million, or about 2.8 million under plan by the end of the year. Advances, still running I think that's under plan so far, so we expect that to continue. All other financing sources, no change from previous month. That's still that refund from the rebate from the county auditor. On the expenditure side, again, when we look at personnel in the aggregate, running about $4.5 million under plan this month. Our projection right now is that that should continue to end the year about $5 million under plan. And keep in mind, and one of the items I will mention to you when we get into the 5-year forecast is, this is the one line item where I like to have a little cushion, if you will. You never know what we're going to need personnel-wise after the year begins or things happen during the year. So rather than ratchet that down to exactly counting every head and every penny of salary, I'd like to get a little room in there. And I thought there'd be about $6 million of room in there, and it's working out to be pretty close to that. My point in that is, it's not so much a behavioral difference as it is we had a little extra in the plan. That seems to be panning out. So this is really, in my opinion, on target. But that difference helps mitigate that $17 million.
But that was just conservatism that
That's
you
true.
budgeted into the year.
Yes. And you'll see in the forecast right now, I have not built that in, and I'm going to ask to have that built in when we modify the 5-year forecast to come back on the 28th. Couple of graphs on that and trend lines. Page 6, non-personnel related. We get into purchase services. Again, while that's been running over plan, we believe that's going to come in at probably at least $17 million over plan by the end of the year. As I said, it's primarily those deductions that come out of foundation. And I did a projection there for where I think that open enrollment, community school, STEM scholarship, and other adjustments is going to run for the balance of the year.
So I'm sorry, just as I look at, so state revenue is actually positive,
Yes.
but it's despite the adjustments being larger than expected. Does that reflect as an expense, or is that a contra revenue?
The deducts are an expense.
Okay, so they're down.
Revenue is pure revenue, expense is pure expense. There's no offset. Page 7, other objects. We're running behind plan primarily because of settlement charges. And as soon as we receive settlement, that line should jump back up and be on target. But we do believe it'll run about $700,000 under plan.
Will that affect us adversely anyway? What's the, I mean, so it's running under plan. Do they know when they're gonna, you know, the computer issue's fixed? Is that, so when we have some idea if it's just the computer or it's something else?
Oh, no, it's just a computer. Yeah. It's just their programming that slowed them down. Something happened that they didn't get the bills out on time. They're still working through those bugs. This is just a timing issue, as far as I know. So as soon as we receive settlement, the revenue will go back on plan for real estate, and the expense will go back on plan for other objects because of the deducts that we memo post.
Will that catch up? Will that catch up and get us back to plan, do you think, before the end of the fiscal year?
Oh, absolutely.
And I'm just, and if it doesn't, are there any adverse consequences for it?
If they don't settle, the adverse consequence is we're short $35 million in revenue, but we're also short about $5 million in deducts. So net we'd be short about $30 million for the cash balance. It's not probable.
Okay.
Of course, we can serve up pro next meeting, I suppose.
No, I'd prefer you be right on that. Yeah, I'm just wondering more in terms of, you know, bonds or any other obligations we had that, you know, would look at us at the snapshot at your fiscal year.
Even a slowdown in this settlement, June 1 is simply an interest payment. The big payment is 12/1. That's when we pay the large principal amount. So you're talking about payment of debt? No, that would have an impact.
Okay, good.
Okay?
Any room for surprises with that?
In that real estate settlement,
In the setup?
I-
Could it not be high enough? Could it?
we've seen the calculation of taxes billed. It looked reasonable unless there's a huge swing in like delinquencies, like people not paying their bills. No, there should not be a surprise. That'll be my second course of crow, maybe at another meeting, but I don't think, I'm not worried about that revenue line at all. They said mid-April. We could probably make a phone call to see whether or not we're going to get it. So I can let everybody know. Yes, ma'am.
It went out of my head, but is this the normal timing? I mean, should this, well, normally you have it sooner?
Yes.
Okay. And I guess that was the question. Did they say what the reason is for the delay?
It's the change in computer programming.
Okay. So it doesn't need to be changed in future budgets, it's just sort of an exception?
No, when we do our cash flow estimates for next year, we'll go back to, it's really called the February settlement,
Okay.
what we call it. That's
Okay.
what it's called in law. But there are extensions, automatic extensions permitted, and so that we get it in March.
Okay, thank
But we
you.
call it the February settlement. It's an awful thing.
Stan, just a kind of a reconciliation. The variances that you're describing in the MD&A, is that between the current year actual and estimate, or between the current year actual and prior year? Because I'm trying to-
Current year actual and estimate.
And so there's different numbers there that I'm seeing, like, you know, the personnel related is 4.5 in here versus 6 million on the green bar. And then just the non-personnel seem different too, 3.2 versus, that could be a.
All right, let me get on the same page with you here real quick.
I just asked to make sure I'm understanding.
Sure,
Me too, yeah.
they should tie. Should make sense. Which page are you looking at in the MD&A?
So under expenditures on page 4,
Okay,
there's 4.5.
yes,
Now on the green bar, it says 6 million one, or 6 million, so you're taking benefits out of that?
Yes, sir.
Is that the difference? Great.
it's both lines.
And then the others is just the combination of all the other expenses,
Yes,
not
sir.
just the other objects?
That is correct.
Okay, thank you.
So that brings us to this time of year where everyone would like to get an idea of where we're going to finish 15. And this is my best estimate, kind of a snapshot in time. I attempted to, I believe, fairly close with some rounding, incorporate our variances that I discuss here in the MD&A and compare those variances against the October 5-year forecast, which was the basis for our month-to-month planning for this year. Overall, you can see some of it all adds up. We've got state aid running about 8 million higher. Again, a lot of that's due to that cash flow issue. Other revenues, as I described, coming in under. Total revenues probably about 5.3, operating revenues actually about 5.3 up by the end of the year. In the other financing sources, I reduced advances in, but I also reduced advances out, just so that the actual, you get an idea that if it does come in closer to 20 million than 30 million, at least I made that adjustment. But from a cash balance standpoint, if I take 10 million out of revenue and take 10 million out of expenses, it's a wash. So that doesn't have an impact on the cash balance. On the expenditure side, you'll see here that I've dropped the personnel line by 5 million, purchase services up by 17 million, which is the deduct increase, and so on. And you'll see that essentially that increase in expense has been somewhat mitigated by revenue and other expenditure line, and revenue lines coming above and expenditure lines being below. About a $4.7 million variance to the negative on our cash balance. So our projection is not 129.9 million. It'll be about 125 million at the end of the year. And as we always like to remind you, this was as good as when I wrote it. Things are still changing. Any other questions for the March report?
So this is the March report. We're still going to also talk about, is this also covering your forecast? We get into that a little more detail
forecast
after?
is a related but entirely separate discussion.
Got it, okay.
And you may want to hear some of the staffing pieces.
We do.
Well,
So
we
that-
to lead up to that so that you can see how I incorporate that whole discussion. I say I, it's a we over here. This
Right,
side,
right.
Three of us over here, how we incorporate all of that into the forecast.
Great.
Okay?
Any questions for Stan on the monthly financials? Very good. Jody, did you have a question?
No.
Oh, okay. Good.
This side of the table's good.
Yep. Very good. Well, is Dr. Klein here?
Yes.
Dr. Klein, please come up.
Chairman Hudson, just a point of order.
Oh, yes.
In our last minutes, I noticed that, and it's entirely up to the committee, I noticed that, first of all, that you all thanked me for my report.
Oh, thank you.
I included that in the minutes.
Treasurer Bevard, thank you for the report, and is there a motion to accept the
Yes,
report?
that's what I was getting.
Thank you. And a second.
Second.
Any further discussion? All in favor?
Aye.
Any opposed? Thank you.
Thank you very much.
In my haste to get to the larger items, I apologize. Dr. Klein, come up here. Come up
Okay,
here.
I sit here?
Yes, I think that would be
stand?
great.
What would be
No,
great?
no, please sit.
Okay.
It's good.
Well, thank you for asking me to come. I just have one graph for you that I'd like to share with you, so I'm going to pass it down.
Can I help?
Thank you kindly.
Oh, I can't see her.
And as I was leaving Kingswood, it started drizzling rain, and I'm trying to hide these underneath my jacket so that they don't get wet.
Mr. Superintendent, would you like to introduce Dr. Klein? I think she was here briefly for the budgeting meeting.
Certainly. So Dr. Michelle Klein oversees our attendance and accountability, which includes our EMIS reporting, our Infinite Campus, which is our student information system, our central enrollment, all of our testing. Right now, counselors, social workers, you name it, she does it. It's a big arm of compliance for the agency, and she's been instrumental really in helping to facilitate others in generating those management responses to our data correction opportunities and implementing those. And we continue to focus on those and massage our plans. And as you heard this evening, we've already had some great progress in that regard and anticipate even more in the future.
Thank you, Dr. Good.
You want to have a seat? Please have a seat.
Great. Well, I just wanted to share with you today, someone had mentioned, I was talking with Board Member Gibbs one day, and she just mentioned was, you really wanted to understand what the charter schools look like and what was really that money that Mr. Behort was referencing that was going away from our district. So I just thought I'd give you a little picture snapshot to let you look at the 3-year longitudinal comparison of our charter community schools compared to Columbus City Schools enrollment by grade level. So this just shares with you the fact that in the last 3 years, we've gone from 10,591 students in charter community schools to 16,968 students. Now that number changes day to day, and I want to make sure that everyone understands that, because what happens in the land of EMIS is that these students are reported, but sometimes they're really not ours. And so we have to take both what the charter community school is saying and what our records are saying, and we have to make sure they match and make sure they marry. So sometimes a student will enroll at a charter community school, but they'll still be going to our school. Well, I want to get credit for that kid when he's at our school. So until he leaves or she leaves, even if they put an application in for the charter school, we claim them until the day they leave. So sometimes our calendars don't match. Now when these calendars don't match, no one gets funded for that child. So it's really important that we work together and make sure that we resolve any issues between our charter schools and our public school system. So this is just showing you the comparison. And what I did was take the ADM, the count of students The blue, of course, you can see.
Chairman Hudson,
Yes, from the two-
Michelle, before you
I'm
go on,
sorry.
can I add one? I like your new glasses, by the way.
Thank you.
Before you go on, just to let you know the complexities of this whole enrollment issue, a family can actually put an application into multiple charter schools, and we are required then to plan our transportation routing as though they would attend any of those charter schools. So when you read about all of those adjustments at the beginning of the year, it's until it's actually been verified where the child is attending that we've had to accommodate a bus stop to pick them up and take them to any of those charters where they submitted an application until we actually reconcile to determine where in fact they're going. And it could be our own system, but we have to route that way, and it makes it very, very complex, which is why there's so many changes that occur during that first month of the year in our routing systems. This is also something we've been asking legislators to consider in charter reform, so that we have more predictability about where the child will actually be attending, and can it help us address our own transportation expenditures and routing. And, right, Maurice?
Collectively, how is anyone to know where that child is? on day one of the
It's a
school?
challenge. It's a challenge. And sometimes they go one place in the morning, one place in the afternoon, and that's the really good one.
Why?
So let me multiply this by a little bit more just to give you perspective on this situation. So there's something called a forced withdrawal. And forced withdrawals for community charter schools are when a student has not been attending, or when they just don't sign on to their computer for a number of hours in a row. The interesting part for me is, guess whose responsibility it is to find that kid, even though they're enrolled in the community school?
Dr. Klein's.
It's so it's the public school systems. But it just is it's a very perplexing problem. And so I just wanted you to understand the vastness of that. So when we look at our enrollment, and when we look at our 2013 numbers, and you can see the blue is the sum of the charter, the red is the sum of the charter for 2014, and the green for 2015, this particular school year. I've done the same thing with our data as far as the same time period, so that you can see the difference, and so that you can see how large Columbus City Schools is in comparison to the charters. Now, are the charters gaining? Absolutely. When I look at that bottom line number right now from March of 2015, and I see 16,978 students, that's a huge, huge increase. So we want to be cognizant to that.
What was the number the year before then?
I'm sorry?
Do you know what the number was the year before? So that
I certainly do. Yes, sir. It was 12,362 for the January 2014 time period. Now, keep in mind, Mr. Robinson, sir, that these numbers fluctuate, because just because a student's there 1 month doesn't mean they're going to be there the next month. So we get a 0.25 person, and we get a 0.575 person, and so it varies greatly.
You started with the totals. They're not on here that we can see, or can you give us those again?
I sure can.
You started with several totals.
Yeah. Whatever Dr. Good wants you to have, you're more than welcome. We have a variety of information, but I think we were just trying to give a general overview very quickly. So the totals for the January of 2013 were 10,591 students we were charged for. In January of 2014, the number was 12,362. And in March of 2015, this past month, it was 16,968.
I'm sorry, the 13 number was 5,000?
10,000.
10,591. And so we do get information that is distributed by each of the different charter community schools, as well as a breakdown by grade level. So we can analyze that and look at that specifically to look at trends. And, you know, one of the trends that I really notice in our data is that when you just look overall, our 8th grade is very, very low. 8th graders leaving us is relatively low. And so we want to, kind of analyze that. And as an academic services team, we'll actually be looking at this data and diving into it, into particulars, with regard to how we can recoup those students and bring them back to our school system.
Question. What happened to, I'm looking at, make sure I'm reading this correctly, the blue checkered line
Is
are our
CCS.
students in 2013. So these are the number of ninth graders in 2013. 2014, they would be in 10th grade if they continued. 2015, they would be in 11th grade. There's about 1,397 students that didn't come to 11th grade. Where'd they go?
Great question.
Did they all go to charter? Because I don't see where the charter line is increased by that amount.
Oh, there's a variety of reasons. I don't think you could say any one reason was the actual reason, but this is typical when you look at urban high school students. You do see trends such as this. It doesn't make it right, and it doesn't make it the way that we want it to be.
So according to this study, what percentage of these students, what percentage of that 1,397 are going to school out of the district?
I would have to go look at that, Board Member Gibbs. I haven't analyzed that and looked at that percentage. I'm not sure I will be able to get the statistic that you're asking for, because I can only go back in our student information management system and tell that they left. I can't tell to where they left to necessarily, unless I took student by student.
Can you tell if they came back? You know, sometimes they leave in ninth,
Oh, yes, ma'am.
try a year and come
because
back.
Because the SSID follows them anywhere in the state of Ohio. So yes, ma'am, we could tell how many came back.
And so I think for today, we're asking for Dr. Klein to present this so we could see kind of where the trends are. So we'd have this snapshot as we talk about next year's staffing needs and then the forecast numbers as well. So we'll be. So I was going to say. So we can do this as a to be continued. Yes, Board Member Gibbs.
Yes. So to that point, then I'm not clear what this trend is saying. What trend are you, from interpreting this data, what are you saying the trend is? Or what are the trends? These are just the numbers. What is the trend?
Well, I'm trying to think how to answer that correctly, ma'am. There are so many factors that I wouldn't be able to attribute it to one specific thing. And so I think that would take a whole lot of work to determine that. I can tell you that one of the things that is affecting us is the number of charter schools that are opening, because we have a number of schools that are around our immediate area. And if you look at the data analysis and you look at the heat maps and you look at specific areas, which I can share with you outside of this meeting if you like, you can see where the students live. I can see where they're going to, and you can tell that they are being drawn from certain populations within our area.
But I will say the trend, I think right now, I think it's just a broader trend of that enrollment is rising, and so it provides a context to the outside, to all of us really, as we look at the staffing numbers and the treasurer numbers. I don't mean to cut it off too short, but the staffing overview and the forecast is really long, and so I want to make sure we have time. So I think more to come on this, but I just wanted to give some context for the committee members.
Can I give a recommendation?
Sure.
To when you bring this back or when you present again in terms of how I would use it in terms of finance and appropriations, if you could tell us the number of schools. I don't need to know where they are. I think that's an enrollment discussion, but when we talk about the number, how it impacts us financially, if you could tell us then financially, we have more people in the market or less people in the market during these years, or is there more, is this the year a significant law change? So I know financially, if we have some things coming down in the State House, that might impact us financially. So I don't necessarily want the academic enrollment, but I would like to know those numbers that will impact us financially when you bring it back. And
Thank you, Dr. Klein. Thank you. So we'll, at this point, we'll turn to the update on FY16 staffing, and I'll turn it over to our budget director, Scott Gooding.
I'm going to invite Maurice Oldham, our Chief Business Operations.
Very good.
Maurice's supervision, human resources is part of that, so Maurice is going to lead the discussion here.
Yes, very good.
Afternoon.
Hello, how are you?
We'll email us to you.
And I think that we don't have materials right now. There's a presentation. We'll turn to the screen and so jot down your questions if you have, and we can always go back to any of the slides if need be.
This afternoon, the intent of this presentation is to talk about our staffing overview, the process we're going through, and the logic and the reason why we look at the staffing the way we look at it. On the first slide, you will see the logic and the reason for the staffing overview. The process of acquiring, deploying, and retaining a workforce of sufficient quantity and quality to support the district missions, statement, and goals. There's really 5 reasons here, and I just want to read because I think these things are very important. Staffing needs are continuously evolving based on factors such as student course enrollment, defined student needs, special education mandates, and attrition. Staffing will reflect enrollment efficiency consistent with available resources given the budget parameters. Provide adequate staff for training, curriculum development, and resources to improve student learning. And we are in the process of designing a research-based, data-driven staffing allocation model for implementation in FY 2017. This next slide talks about the staffing process, and as we know, staffing is an ongoing process requiring accurate data and performance management matrix. In this circle and wheel that you see, I won't go through all of it, but I think it's important. Human resource, which is the keeper of the staffing utilization and efficiency, we work hand in hand with all connected, so that's why it's really in the wheel and the circle. Human resource, and you have the finance part of it, which is oversight allocation of funds. Then you have curriculum instruction assessments, which includes the student enrollment and course selection, class sizes. We have the special education and student services, which includes, again, as I state, special education, counselor behavior support, attendance support, and intervention in alternative education methods. And then it goes to school administrators, scheduling student needs, programs, and back to human. So all this connects together so we have dialogue and talk about how we develop that staffing overview and process. On this next slide, we're talking about our staffing patterns. And in the staffing patterns, they're generally based on the following criteria: student enrollment, program needs, and student needs. And under student enrollment, we're talking about staffing allocations are based on student enrollment. In the Department of Human Resource, we monitor class sizes and also course sizes to make those determinations. Program needs, the number of staff needed to implement a program or course to meet Board of Education contractual requirements. And then also student needs, staff is hired and or deployed to meet the specific needs of individual students or groups of students. And goes, so again, as we stated, everything is interconnected, and it's important that we connect those and they correlate with one another as we move forward in this process. Staffing ratios, there's 3-factor contractual, state mandates, and then a strategic plan. And so under contractual, class size ratios are defined in the CA contract, which is the Columbus Education Association agreement. Variations would be necessary because of different grade levels, enrollment totals. And so I want to just really talk about that on each area so we have an understanding of that. Elementary school classes will be organized on the basis of approximately 25 pupils per classroom teacher with a maximum of 30. So grades, in our system, grades K through 9, the max is 29, and at grades 4 through 5 is at 30 in the elementary section. Middle school class will be organized on the basis of approximately 30 pupils per classroom teachers with a maximum of 35. High school class will be organized on the basis of approximately 28 pupils per classroom teachers with a maximum of 36. Again, as I stated, that's tied into the contractual. The state mandates ensuring the special education students have the required staffing ratios pursuant to the corrective action plan for the Ohio Department of Education. So our correction action plan, so we have to tie that in, making sure we staff in accordance to meet those corrective action plans, and also just to as a state mandate. So the next one, the strategic plan, again, is to focus staffing priorities to ensure that each student is highly educated, prepared for student leadership and service, and empowered for success as a citizen in the global community. So again, all those three we tie together, and again, looking for how we develop our staffing process. The next slides that I'm going to go through are just going to give you an overview, point out budget reductions that we've had over the years. The ones that's in red are a budget reduction that was board approved over the years. And FY 2010, we had staff reduction in central office, staff reductions for student losses, reductions for overtime and extended time, reduction to contract or transportation, bus parts, repairs, and combination, and combining schools together. So, so just give you an overview. 11, you see the different reductions we had. And I think it's important because over the years you'll see the trend. There's been a lot of reductions throughout the course of the years heading up to where we're at today. 2011, we had reduction in high school bus stops, reductions in building and grounds contracted services, staff reduction for alignment to enrollment in special programs, reduction due to school closings, and staff reduction to Treasurer's Division due to restructuring. 2012, we had reduction in contractor bus routes, reduction in custodial substitute hours, elimination of transition support coordinators, reduction in central office administrators, wage concession at all staffing levels. 2013, reconfiguration of gifted and talented program, continued restructuring of the Treasurer's Division, and building closures. When you look at 2014, we had reduction in central office administrators, reduction in operations, staffing, and materials, reduction in academic staff and support, reduction in Treasury Division staffing, combination of buildings, removing 1% of cost of living adjustments in fiscal year 14 district-wide, and remove in fiscal year 14 as well supports included in October forecast that was not implemented. So today, fiscal year 2015, we have building closures year-round, from year-round to traditional calendar in some schools, reduction of peer system review for teachers, benefit premium holidays, student decline in enrollment deduct from FY14 spring allocations, teachers were not replaced, reduction of assistant treasurer position, instructional assistant realignment per contract, reduction of 9th and 10th grade quota passes, reduction of utilities through reorganization and restructure, reduction of curriculum vendor contracts, two-phase reduction of the Rival University program, elimination of handover research contract, and removal of 1% cost of living for FY15 district-wide again. And so when we look at a snapshot of where our staffing is as of March 2nd, 2014, if you look, I want to just bring your attention really at the bottom quickly. We have a total of 8,864 employees. And then when you look at that, it just gives you an overview, a breakdown of the demographic of our employees, administrators, and classified. And so just so this way it's working, there's no self-explanatory, but just in case it's one need to know. The female section, minority, non-minority, male, then we have the total, and on down the line. So just want to share that with you as well. Next, staffing adjustment. This is moving forward for adjustments that's needed for upcoming budget process fiscal year. In academic services and accountability, look on down the line, academic services is an increase of 3.5 FTEs, accountability is 12 FTEs, career tech, workforce development, and adult education is 1 FTE, external affairs and communication 1 FTEs, gifted and talent 17 FTEs, human resource 1 FTE, professional learning 14 FTEs, support services 67.25 FTEs, teaching and learning is 11 FTEs for a total of 127.75 FTEs. That's to, again, that's moving forward in our budget process as we move forward for next fiscal year.
What is staff support or student support services?
Sort of special education in general. So we'll have special education supervisors, coordinators, teachers, psychologists, speech language pathologists, OTs, PTs, so on.
Those those are all additions that are being required by Department of Education under a consent order?
It's a corrective, it's part of our corrective action plan based upon findings in this particular area. That's correct.
Specific to that line item?
It is.
Yes.
Yeah.
Yes. So is the same with gifted and talented as well?
Gifted and talented, they're changing the local report card to reflect additional indicators over time, and in order to address disproportionality issues, we've indicated, I believe it's 10 additional FTEs, is that right, Dr. Boyle? To provide more primary support for skill building. And then we have I don't believe we have any additional for the Gifted Academy, but we may have some for integrated arts for those, is that correct? Or you look like I need to be corrected, go ahead.
No, you're correct. Actually, the Gifted Academy we're staffing from within our current staff, but the additional 7 were for the reading and math direct services to elementary students in some buildings around the district.
So, and again, that was to address new indicators and also the disproportionality.
And how about teaching and learning?
Teaching and learning, we had a number of TOSAs, teachers on special. They each have a slide.
Oh, very good. Sorry.
Oh,
There we
sorry.
go.
So the next slides we're going to go to breaks down.
We don't have to now.
Nice
Just fly through them.
Thank you.
So if we had the slide deck and then we could flip through it.
That's all right.
So.
Sure.
Academic services, and it's in the order that we
Oh,
just
hold on,
spoke.
wait.
So this 3.5, that's a full-time equivalent for a whole year? Is that what the unit is?
Yes.
Okay, thank you.
So the next slide, academic services, again, the total is 3.5 FTEs. It shows here classroom teachers, elementary school, middle school, high school, 2.5 FTEs. Administrative secretary, 1 FTEs. And then the fall enrollment adjustments, that's to be determined, but as of now, it's 3.5 FTEs. The slides, I'm sorry.
Well, I'm just wondering, so what's the usual adjustment in that line? In the fall,
It's difficult to predict trend data because in the past the district had actually made those adjustments after count week in October. So they could add as few as I recall as 60, as many as over 100 new teachers at that point. In the interim, they would hire substitutes or additional personnel to be in large class sizes until we were certain that enrollment had stabilized. We began the practice last year of actually staffing up at the beginning of the year based upon the trend data. So we should be, and I don't know if you kept the slides in by building already or not further down in the deck, but it shows that as a result of staffing up early, we don't anticipate those kinds of significant fluctuations in the past. So you can see here, we already know where we will likely have to increase our staffing.
So this is not new FTEs, but where you're filling vacancies, assuming either a flat or declining student base?
And my concern is just that do we have a reserve for those if there's an additional FTEs?
That's a 5-year forecast issue. Remember I said I don't have that in there. You see the number that I put in for FTEs, and if the students show up and we need 60 or 100 teachers, we're gonna. Right. You want me to put that in now?
Is there?
That's going to be a
conversation, right?
So this past year we added approximately 20 new FTE, because what we want to do is we don't want to put the staffing in there now until the kids show up. So we analyze the enrollment in each building, each classroom, as soon as the kids show up, knowing at the beginning of the year there's some kids that are showing up, some aren't here yet, so we continue to monitor that. And then there could be some winners and losers, because you can see in this, for example, this first slide of elementary, some buildings may be overstaffed. So we'll look at that, and there could be some shifting between buildings of even greater things.
Board Member Gibbs?
Yes, but to that point, in knowing this, do we not have a better strategy? One of the things we hear, and I know, the first couple of weeks, you have some people with classrooms with teachers. Then we have a lot of classrooms with subs, and that goes into September, and I've seen it go into October. So, and then it's this great big shift. Can we not be more accurate with this in terms of even using, we know it's gonna shift, we know it's gonna change. We have these people, according to this chart, what it doesn't show us how many times people change in 1 year. I know that. I've seen people start in a charter school and switch in October. But how do we reduce the number of classrooms that don't have their assigned teacher quicker?
So we actually did address that. Like I said, in the past, the district is adding as many as 100 or more teachers in October. We changed that practice using the trend data so that you can see we're only predicting the addition of maybe 1 or 2 teachers instead of what used to be 5 or even 10 teachers per site. You will still have some places where that number, for example, you may have 30 students in an elementary classroom, which is not ideal. So you want to wait until that stabilizes, so it makes better sense from a management or fiscal stewardship perspective to hire a substitute until we understand whether those students are going to stay, and if it makes sense then to split that class, so you may have a 3-4 classroom versus adding another full-time teacher at both 3rd grade and 4th grade. Does that make sense, Alicia? Or?
Yes, yes, actually it does. And our process that we started last year.
Yep.
Coming up.
Attempting to.
Wait and talk of me.
Yeah.
Hello. Alicia Gillison.
Alicia Gillison, Chief Academic Officer. And Dr. Good, you were doing excellent explaining that in the new process that we started last year, looking at trend data and trying to forecast where those variances would be, so that, as Dr. Good stated before, those shifts used to take place after October count, and now we are actually, I don't want to use the terminology front loading, but we're actually doing it much earlier and looking at the trend data. So this year coming up, and this process right here is pretty telling. When you look at the information, if you just kind of reflect on what Dr. Klein had shared, and looking at the numbers and the projections, and then we look at these numbers and see the -1s, +2, -3, and that's us, a proactive attempt in trying to stabilize the beginning of the school year.
Okay.
So let me, just one more data point if I may. So ECOT, Electronic Classroom of Tomorrow, had 3,689 students allegedly enrolled. But let's say through our monitoring process, we discover that the seat time, you remember Dr. Klein talked about, if they don't demonstrate the seat time or login time at 4 hours, then we have to determine where they are and enroll them in our building. So at even a 10% error rate, that's over 300 students that we may have to enroll that we weren't anticipating, that we thought were going to go to ECOT. So, and when you have as many as you saw, allegedly in those community schools, as we find them and they return to us, then we have to make those adjustments. So it's a tough one. It's a tough target to predict, but we do have some trend data that's helping us in that regard, in that respect.
And we are attempting to be as proactive as possible. There still will be some shift, but we really want to make sure it is declining from the way it has been in the past.
Well, my concern was was to make sure that we're leaving ourselves enough cushion.
Right, enough cushion.
To do that. So when I saw, you see just 2.5, and then, yeah. But a TBD is, to me, isn't cushion. Like there should be a number. So
and
there is.
That's a piece that we're working on. That's
okay.
Back to what Mr. McCormick said.
Okay.
And the other piece with that too is from these meetings. I don't want you to think that it's just the people in this room here and sitting behind you that are part of that. I mean, it was very impressive group of folks that we had. And getting back to the classroom teachers, I mean, we even have, Rhonda and Phil and CEA, Tracy, they were all at the table with us because we want to make sure that we have all those interests and those viewpoints and different perspectives that folks may have and how this impacts them shared there, so that we can make the right decisions quickly enough.
Good.
Okay. Here's a question.
Sure.
I have a question. In terms of tools for balancing, would it ever be, you find out that this school is, 20% over capacity in that grade, and this school is 20% under capacity, so those children might be at a border. I mean, would you move a child, in October to a different school? Is that a...
So generally, because of our centralizing all of our enrollment data, our data in the student information system is more accurate than it's ever been. And so we know if we've already reached capacity of site. So I know that we have, in fact, said when a new family enrolls, this site is closed at that grade level, there may be the potential to split the class down the road if we have a critical mass, but these are the next contiguous areas. Is that correct, David, Alicia?
That is absolutely correct.
Okay. I just always like to make sure I'm saying the right thing. They teach me well, and I try to
But
honor
that's
them.
just in the summer, not during the school year?
No, during the year as well.
Okay.
Yeah.
Just having the tools for either
And a lot of
adding
times you may
teachers
not
or
have
moving
enough physical
students.
plant space to add the class because of the enrollment. So.
Well, Maurice, do you want to continue?
Sure. So the next few slides you will see just shows the breakdown of the adjustment that's made in each grade level, classroom, elementary schools, middle schools, and high schools. So we just stroll through that as opposed to reading every school. Unless you want me to finish.
No.
And those are pluses and minuses, just.
Yes.
Yes.
Plus and
Can't see the
minuses.
pluses real
Yeah,
well.
right.
Yeah.
No, you're good.
And then you have the high school area as well. And the last area is career tech. Career centers, I'm sorry, career centers.
Just a very quick question, and just in general, how were those schools identified? Was that enrollment trends as well? Okay.
Yes. The next area is accountability, and just to break down again, total of 12 FTs. It shows you the breakdown, how the breakdown of the FTs came about. Office automation, data processing, down, so on down the line.
So
Yes.
it would feel, as you kind of go through this, it's almost how many of the new hires are because of enrollment, how many are program development, and how much is regulatory? Maybe those are the three buckets, not for now, but maybe down the pike, because it's really hard to differentiate.
And so I will comment on that one. This one is regulatory. This is to implement our most recent corrective action plan associated with some of our internal audit preliminary findings on data management in the district. So we've taken the recommendation of Dr. Klein and the accountability shop in staffing up with specialists that can help us with that ongoing monitoring and also supervision. So.
And the district has, the administration is working with the internal auditor and the audit committee have all worked on these issues over the last year.
Right.
So I guess the question is from the audit and the corrective action, is this, and what do you do with the staffing once you've addressed the corrective action? Is the staffing a part of is that the ongoing compliance?
Well, and I would just observe it from, this is more about the ongoing control environment.
Okay.
So it would not be, this isn't just for remediation.
Okay.
This is to do the implementation
On a
until it'll be on
go-forward
an
basis.
on-go-forward, yes.
That's correct.
Great question, though, yes. I mean, that's great. Yes.
And so the next section, in each area with this next slides, we've already talked individually in the summary about what every area is. This next slide again just shows you what the breakdown are in each area is. So this next is career tech, workforce development, adult education, 1 secretary, administrative secretary. External affairs and communication, 1 FT, executive director of external affairs and communication. Gifted and talent, total of 17 FT, shows the breakdown of gifted and talent. Gifted instructor specialist, primary enrichment specialist.
And we started to talk about that earlier before we had, so we jumped ahead. Anything else you want to add?
No, I think if it's in 2 buckets here, it's both in an effort to address new indicators on the anticipated local report card, but it's also program enhancements to address disproportionality. And also, quite honestly, when you look at the middle school and the bleed factor that Michelle showed us of students leaving, this is a way to recapture many of those families, and we actually have some data we can share that shows how many have elected now to remain in district versus seek those acceleration opportunities outside the district at the middle level. So in many ways it could impact some of that deduct and reduce the deduct at the state level.
What do you mean by disproportionality? What is that?
So when we look at our overall student demography, and we would expect those that are identified, for example, with superior cognition, to be representative of the overall demography. When it's not, it's disproportionate. So you may have more of one gender, more of one ethnicity, et cetera. So
And that affects
then you would anticipate.
staffing.
Well, certainly because we want to make certain, like I indicated at the primary level, we're providing the right kinds of experiences to develop the skills in those children so that more of the underrepresented population would qualify for those sorts of services. Is that correct, Dr. Boyle?
You're doing great.
Okay.
So when somebody leaves and they come back, is this when you're doing your assessment to say they're gifted and talented and you want to place them in a particular area? But I guess the question is, you don't get the opportunity necessarily to do a survey when they leave. It's only when they come back that you're really making an assessment and trying to place them in the appropriate, if you've identified them as gifted and talented. Right, so I guess that's where you get your data, is when they come back. They may leave and go outside of the district, say, no, I want to come back. You guys are having dialogue, understanding those skills, and identifying those that would be gifted and talented and placing them in those respective studies.
There are a couple of ways that happens. If they're students who've been previously in Columbus City and leave and then return, their previous gifted identification actually is still on file with us. So as soon as they enroll, then we know right away, this is a gifted student. We need to make sure we're appropriately serving them. If they are new to our district initially, they're coming from another public school district, they may bring that information with them, and we have on our central enrollment form a place for them to designate that they were previously identified as gifted and talented. Also, they can request testing, and by law, we must assess them within 90 days at their request if they're new to the district, to ensure that if they're gifted, that we get them properly identified and get them placed into services.
And so related to student services, Dr. Bates would tell you that that role is even more stringent in terms of the testing required. I believe it's within 30 days that we have to... 90. It is also within 90 days, but again, they could have left the district already identified. Any exceptionality, so both gifted and a student with special needs that's deserving of an IEP would fit in that category.
Question.
Yes.
I did. Internal auditor had her hand up first.
Yeah, I did. I just wanted to get clarification on, sorry, I can't remember who asked the question, but it was regarding about what's the driving factor behind some of these increases. Is it regulatory? Is it strategic alignment? Is it, I can't think of what the other thing is. Are we going to get that type of information? Because that would help me as far as some of the increases that are attributed to the internal audit and the external auditor of state.
Yeah. We could do that easily enough because we know whether they're just programmed based upon enrollment or because of some compliance measure. Those three.
I think it would be
buckets.
really helpful to do that as this is presented to the board, and not just so that the community knows.
Yeah, right. Yeah, some of them you just don't have any choice. And
I think it's a very good suggestion.
And especially so when you look at our overall enrollment appears to be declining, and yet staffing appears to be increasing. It helps to understand these are to fulfill mandates, these are to fulfill program expectations, and these, in fact, are based upon enrollment changes.
Board Member Gibbs, did you have a question as well?
To that point, in this 17 FTEs, they're instructional specialists and primary enrichment specialists. Can one of those do testing? Who does the testing?
We actually already have in-house a testing coordinator who does our assessment, and then we also have 2 part-time hourly staff members who assist with assessment, and then we use data from the Measure of Academic Progress assessments that was piloted this year and the Terra Nova for identification.
One of the concerns that was brought up during the presentation to address the disproportionality is that we have enough people to go out and then test more kids, and I don't know that we had enough people to test more kids, all kids, so that we were making sure everyone gets tested. With this, is this the number you need to make sure that we're able to test all of the kids so that we aren't leaving any out that would qualify for gifted services?
I believe right now we're in a good position to test new referrals that may come as a result of the program that we're trying to implement. Yes.
We rarely ask if you want more money, but that would be like the question. Okay, and because right now, the question is, now with the new gifted program coming on board, there is, and you're right, there's now increased interest in that 3-8 program, but we haven't identified, and we know there's large subgroups that haven't been identified. So does this?
As of right now, I believe we are in good shape. With the pilot for the Measure of Academic Progress this year, that actually alleviated some of the demand for assessment from my staff that I have. And so that will, if we continue to use that, that will continue to help us next year and will still allow us that space to be able to test any referrals as a result of that new programming.
Are there enough supports for referrals? I mean, because this is a big continuum. I just want to make sure that if to address the corrective action plan, we're addressing it from the full circle. So
I believe so. We will have fewer gifted resource specialists, gifted coordinators. However, with those 10 primary enrichment specialists, they will be face-to-face with teachers in their classrooms in up to 50 of our buildings, and those are our buildings with the greatest disproportionality. So because of that, there will be ongoing conversations every time they are in those classrooms about what characteristics to be looking for to identify those students and to generate those referrals.
Colleen, remind me, can any psychologist do that, or is the testing?
The testing can be done by our psychologists. They actually do very little because they're working on special education testing. If it's a classroom teacher, or in our case, we have a teacher with a master's degree who's been especially trained to administer those assessment instruments, and it's the same with our part-time hourlies. They're all gifted coordinators certified by the state of Ohio and have master's degrees with experience in testing and administration. So, but they do not have to be a licensed psychologist.
Right. So you will see on the student support services slide the addition of some of those other support personnel you described.
Do you want to, is that the next one? Maybe that'll help tie it together. Okay. All right, well, let's go to the next one.
Yeah,
thank you.
The next one is Human Resource, 1 FT, Senior Executive Administrator for Human Resource. The next is Professional Learning, Peer System Review Teachers, 14 FTEs. The next one is the slide you're speaking of, Student Support Services.
There we go.
there you go.
Yeah. So, yeah, who's talking about this then?
So Dr. Fletcher Bates will be addressing these. Any questions here? Thank you.
Welcome.
So look at all those psychologists.
Thank you.
Just went out.
So, this is all mandated?
So I can go through each one of them and tell you if you'd like to, but
Maybe just as an overview.
An overview?
Yes, the first.
So the overview, if you go all the way down to psychologists, supervisors, it comes out of the Ohio Operating Standards, 3301-1509. So, and when we look at the standards, we had not been in compliance in the past. For example, a psychologist can service 75 preschool students and 125 general ed students. We were over the numbers with about 159 per group. So what you have here, when it goes to each one of those, that's how, and I could tell you all the numbers and exactly what section it comes out of.
She really can.
That's okay.
I think just in summary, we would, as a follow-up item.
I don't want the items.
I think I would suggest so of the 67.25 total, which of those are all of those regulatory, all of those regulatory required?
Not all are regulatory. For example, the Secretary 2 isn't regulatory, but it's needed because I didn't have a secretary. So it was a secretary for me. And
I all understand that issue.
Okay.
All right.
Well, and maybe we can move it to, just in general.
So what about the ESL? Let's look at the ESL population. For example, you'll see there where we have ESL teachers. Those are for our new sheltered sites. We increased our shelter sites from 3 to 7. And as a result of that, we needed ESL certified teachers in each one of those sites. So that's where you see the increase there. The 2 TOSAs are
the shelter sites?
What a shelter site is? So a shelter site is essentially, if we look at the continuum, Columbus Global would be the first area where a non-speaking, English-speaking student would come to. Well, when they leave Columbus Global, when they go to a sheltered site, we don't put them right into the general ed population. There's a middle step. And that middle step is the shelter site. And that shelter site still provides them the services in the core academic subject areas and gives them their teachers support from a teacher on special assignment to assist them, because we still have those kids are coming and moving at different times of the year.
Very good.
And then the third place would be general ed.
Okay.
So my question then, in your item for the psychologist and I understand we need to right size the number, but now do we have more staffing to do the testing for both IEPs and for gifted? And is that what we're seeing reflected here? Do we have enough?
Well, we could do testing for gifted. We had not looked at it from that perspective. That 1925 just looks at the special ed population in terms of the number of students that they can provide service to. So depending on the actual number of students, I'm sure that we can make room to assist. Now that would also cross over into our special needs preschool as well. So it encompasses our entire over 9,000 students with disabilities alone for that 19. We currently have 64 psychologists.
And the reason I ask, I know if to the whole 90-day, this piece, that piece, we had a very small staff. I mean, it seems like it's a lot, but when you're serving 50,000 students, you know, that's a lot of students to cover. And when you have to do IEP meetings and you have to do them on a recurring basis, you need more hands on deck to serve everyone. Or if someone wants to say, I want my child tested, and the amount of time that it takes to turn that information around. So do you feel like this addressed that and we have enough people to provide the testing for both gifted and special ed?
Well, I think this addresses our special ed issue, and I think in Colleen's department, her 2 part-time hourlies and her full-time FTE, at this point, based on the numbers of evaluation requests we've been having, that it would accommodate, as she said. One piece I wanted to re-emphasize, our psychologists don't do the IEPs, they do the ETR, the evaluation plan. So they do that every 3 years, whereas the IEP is annually. And those IEPs are done by actual teachers.
I do want to point out, so we've been talking about regulatory issues, and there's a lot about the gifted talent. There's also another
it's another finding, a Title III finding
from the Department of Education on our ESL programs. And so the latter positions there, which of those positions are all of those positions in response to that, or which are enrichment positions? So
the findings with the occurrence with the compliance issue is around more of global. It didn't incorporate that, but a part of actually ensuring that global, those students that leave
Global Academy.
Global
right?
Academy,
Okay.
Columbus Global
and I just
Academy.
want to make sure, because our community folks don't
Okay.
always know all the lingo.
So part of that is that our students at Global Academy were staying there too long. That's supposed to be the first tier. And so the recommendations from the state was that after 2 years, those students move out of that space where there's all children who are non-English speaking children and move into a space where they can begin to acclimate with the general ed culture.
So is that global school K through 12? Because I mean, you're kind of
6 through 12.
6 through 12, so you're onboarding, getting them oriented, and then you're going to place them.
Right, and then we want to move them out to sheltered sites.
And then from shelter to general.
And so once we implemented the plan, we needed to ensure that we had shelter sites in every quadrant of the city so that those students now that won't stay there until they graduate, once I acquire English at a level, well, I won't do all the levels, but once I get a strong acquire, then I'm ready to move into a shelter. But we didn't want them to have to travel far, so we ensured that we had them spread out in all the quadrants so that it would make it more convenient for the families, and as well as our transportation and the time that they're on transportation. So we extended the shelter sites to accommodate that, but that wasn't a requirement of the recommendations from the state.
How many ESL students do you have in global, shelter, and general ed?
So we have 6,100 ESL total students. Right now, global is at 793. They have that many, and then we have 3 current shelter sites right now, which is Mifflin Middle School, Northland High School, and Mifflin High School. And I don't have the accurate number to tell you exactly, but I could tell you, estimating the number of classes we have over there, that we probably have about 300 students in a shelter site right now.
Okay. Thank you.
Yes. You're welcome.
I just want to, I know back in maybe November, you and a couple members of your team came to the Audit and Accountability Committee and went over the special ed audit. And will some of these hires address those non-compliance issues?
So those areas, yes, it will address some of them, but indirectly. We didn't get a finding for not having enough psychologists. Part of it was because they worked so closely with us, when they started to see our numbers, it was a recommendation that, oh, you won't see a finding in those 6 areas that says that our numbers were. It's more of a recommendation, and that, you know, you realize that you should have X, Y, and Z.
Yeah, but you can't, we need to perform the services we've committed to perform. We need to have, this is the staffing we need.
So you're just being proactive, so you don't have a
Finding later on, exactly.
I think that and the State Department made a commitment to work with us, embed some of their own personnel to create an urban model that could be replicated not only statewide but nationally. So they've invested some resources as well and expertise to help us create what they may in fact ultimately mandate in other locations. So as the largest district in the state, and arguably perhaps some of the highest percentage of students identified with exceptionalities, it makes sense for them to do that here, and we should lead in that regard.
Okay, very good. Maurice, do you want to? Oh, Jody, I'm sorry.
So the last one, it's a part-time hourly admin, but it's 1 full-time equivalent. Is that more than 1 person, or are they not part-time?
So it's actually the 2 part-time hourlies at 0.5.
Okay.
And what that position was for is to bring on part-time hourlies to help us with interviewing for new hires.
Okay.
Because of our tutoring program and our special needs, we need a special process to ensure that they understand, you know, the compliance areas.
Thank you.
You're welcome.
Okay, very good. Thank you.
You're welcome. Thank you.
So is it any doubt we have the right leadership and exceptional services with Dr. Boyle and Dr. Bates there?
Very good.
We will be compliant.
Good.
The next slide is teaching and learning. Total of 11 FTEs. It's whole listing. It's gone all the way up.
Would you like to know what a TOSA is?
Good evening. A TOSA is a teacher on special assignment.
And please introduce yourself.
I am Sandy Downell, Executive Director for the Office of Teaching and Learning. Good evening, everyone.
Good evening. Thank you. And say again, TOSA?
A TOSA is a teacher on special assignment.
Okay.
And so we have an additional 11 teachers on special assignment. 4 of those will be for the purpose of Unified Arts to support the new gifted school. So vocal music, instrumental music, PE, and art. We're in the process of hiring right now because our Article 211 process, actually we can offer jobs today. In addition to that, we have appointed 1 additional elementary reading coordinator to support our 74 elementary schools. We've appointed also an additional elementary math coordinator to support our math program, an additional 612 reading coordinator, and an additional 612 math coordinator. We also appointed an elementary science and an elementary social studies person. So we're very excited to extend our staff to provide another layer of support to our teachers.
So this is program development, program improvement.
Yes, so
efforts.
Program development, teacher professional development, working with teachers on effective interventions, community support, working with parents. So they do quite a bit.
One thing I would just suggest is, as we're going through this, I think for the board presentation, it would be to show how many we have in those categories, how many folks we have already, and then to show that this is the variation here. I don't know. Scott, I don't know if you heard, I was, so I think if we show that, so that we're adding one, but we already have, so right now, like in this, the math coordinators, how many current TOSAs do you have?
So at the district level, we have one elementary, and we're adding an additional elementary at the district level. At the 612 level, we have one and we're adding one. But I would want everyone to keep in mind that buildings do have instructional coaches there to support instruction as well.
Yeah.
Our district level TOSAs provide support, professional development to those building level TOSAs as well.
Great, great. Oh, yes, Mr. Treasurer.
Spirit of glossary building, Sandy mentioned our 211 process.
Yes.
And just briefly tell everybody what that is, because if you're not impressed yet with the complexity of staffing and the detail, listen to what this adds to it.
So Article 211 is our process that we use in schools and at the district level to hire.
It's an article in the collective bargaining agreement that's numbered 211.
Okay.
211.
I was going to ask the source of that article.
It's good to know. There's no magic to it other than you look at it and then get to Article 211 in the collective bargaining agreement.
Okay.
And that's the process that we use to hire staff. So we post the vacancies throughout the district for building level and district level positions. Teachers are able to interview for those positions, and then we select them for those positions.
So it's not a minimum staffing requirement, it's a selection process.
It is a selection process.
A lot of people move, and that manifests itself in a lot of
complexity,
tracking issues, which sometimes leads to things in an audit, because we don't know, we've got to figure out where they are.
Got to manage
catch
complexity.
payroll up with HR. It's a lot. I just wanted to point that out. It just adds a whole nother layer of stuff, of moving parts that go on here.
Well, and it's incredibly more complex than what was just described. And we could take 30 minutes to talk about that 211 process. And we don't have that time.
We don't. In the interest of time, we are running out of time, so I want to make sure, because we still talk about the forecast.
Thank you.
Okay, so go forward.
This slide here, you'll see, and this is just the general fund piece.
This is not, you guys, we have to have this stuff in hard copy. This is, it's hard, you can't even see it. Why don't you go ahead and talk about it, Scott, and then we're going to have to figure this out, because that's not good.
So what we have here is 5 years of actual, and you'll see that these align with the budget reduction pieces that we did, and as Mr. Oldham referred to earlier, the items that you saw in those budget reductions in red and bold were all items that related to personnel. So we kind of wanted you to see that. So in fiscal year 10, salaries, wages, fringe benefits was a total of $527.8 million. FY11 was $528.1 million. FY12 was $525.9 million. FY13, $524.6 million. FY14 was $529.2 million. 15 and 16, which will be incorporated in the 5-year forecast of this piece, and these have asterisks there because obviously these are items that are proposed in the May 15 5-year forecast update that we'll be talking about, as well as once that comes to the board for approval. So that's where the subject to that update is. The 2015 number that we're looking at is $531.0 million in FY16, which incorporates the 127.75 which we just walked through. Those are factored into here, as well as the impact of the large increase in retirements that we're seeing for this year, as well as their severance pay. So for FY16, we're looking at $548.1 million. So those are the dollars on the general fund side that you'll see over the 5 years plus the current and the next year as well.
So you think the fringe benefit jump is the retirement jump at 16 that you're anticipating? 164. Seems like
well, that large number of retirees will also have the severance piece there as well. And I think we've got 4.2% built in for insurance increases. 4.4
from building for insurance increases.
Tim?
Yeah, so I think this is really helpful in having that broader, longer perspective, gives you a lot of insight it would be helpful to, I think, add to this so you can parse out, you've got inflation and some other things. The call outs you described is if you had the FTEs, so that would tell you is the FTE count going, and then student enrollment, maybe on that same page to kind of, you'd see these 3 trend lines, and then just footnote those really big items would really be helpful in telling that story, which I think is important and significant.
And then some of the stuff we talked about last meeting is when you reload, it's a higher price point to reload with new FTEs. So that'll help understand going forward gaps as we discussed.
Good.
I think why don't you have you advance and then.
And then here, and I think the one thing after we're thinking through Article 211 is just kind of our staffing timeline. In May actually should be the job fair piece of 211, because really there are 3 rounds to the Article 211 process. In January, we began initiating the staffing allocation process, and then the conversations are going on. February, most of these are all really tied to that Article 211 process that we talked about. In February, we go through roster labs so that building and department administrators go through to identify and make sure that the people I have in my building are the people that are showing on the list, reconciling those, as well as building them for next year. And we go through those calculations on what the enrollments look like in those buildings, so that if we need to make those tweaks, we're doing all those tweaks early on, so that if I'm in a building and I have 19 FTE, but enrollment's going to look a little higher, and I need 20, I need to post that new vacancy, so that I can put those out there for staff to bid on, to interview for, to go after those. March, that's when the staff postings go out, interviews occur. April, staff postings and interviews occur in round 2, because obviously in round 1, if I've left my building and gone to Stan's building, now there's a vacancy over here that Carol is going to come in and apply for. So we have that domino effect that we're going through with this process. May is the job fair, which is, and we'll put that on the slide, which is the jobs that are left. So then we put those out in the job fair, and then it's a mass call to get those filled, or we move forward. We may have to move people into those to make sure that we have those vacancies filled. In June, the board will adopt the FY16 budget. July, FY16 begins. New school year begins in August, and then, as board member Gibbs mentioned, we put October, but it really does. It's September. It's been October in the past. This past year, we were able to do this in September because we want to do it as soon and as early as we can, so that we get those rooms filled with the regular teachers, so that we don't have that turnover in there, and so we get some consistency in the classroom environment for the kids. So that's our timeline. But one of the earlier slides that I think, and I'll jump to that next one, Maurice, that I'm going to steal slide 2, the second bullet point here that Maurice has talked about, is we're looking to kind of to do something new. And we're going through, because right now, as earlier slide mentioned, we have ratios for classroom teachers. We want to get to a point where we have an allocation model that identifies staffing and FTE based on every type of employee that we have. And I'm just going to pick out a number, but for custodial services, if I'm in a building with X square, 1,000 square feet, and we're going to provide this type of level, there's going to be a metric to it. So we can look, we're going to have an input, we're going to have an output, and as a building administrator, I can walk through this crosswalk and go, okay, here's my enrollment, here's my square footage, here's my economically disadvantaged numbers, all the factors that go into it, and boom, here's going to be my FTE. That's what we're trying to get to. That's kind of the year 2 piece of our new budget process. So we're excited about getting there, and we think we're going to have an incredible product when we get there, so that even a new principal can walk in and figure out where they should be staffing-wise. And it's looking at everything staffing-wise.
So you've got an activity-based budgeting system that works, that you can use to do this.
Right. Because we've gone through that piece with kind of the hybrid zero-based budgeting on the non-personnel side. This is going to take it to the personnel side.
If you can do that, you will innovate. We will cut down years of frustration.
And the hard part with it too is once we get through that, we may have, for custodial services, we may have 50 metrics. We're going to have to bring a team together and figure out which metric works for us. Right. And then with that, looking at the macro level, there may be categories, classifications of employees where we may be under, we may be right on target, we may be overstaffed. So we have to look at utilizing those differently. So that, that's not going to be an easy conversation for some, if you're in that department where you're losing staff. But that's why we have to work through that. And it's going to take next year to do that. That's not going to be an easy task, but I think we're moving in the right direction, and we've got some incredible data so far to look at that. It's
great.
I'm excited.
One of the parts that isn't necessarily in here that is a very big help that we need would be the marketing and communications campaign to say, enroll your child where they're going to be before the first day of school. And we still have, I know families that come to school after Labor Day, and that wreaks havoc on every one of these metrics they're trying to put together. And so we're planning, as you say, to have, and we want the right number of teachers in the right places. So even though I was on the other side hammering you down, I know they're in my family. Who told you school starts September 6th? It's August 20th. But to change people's minds about that is really difficult. So as much as even on the marketing communications, on the word of mouth team and in our outfits, we have to say, we need you to decide, give us August 1. But the number of people that wait to the last minute causes, I know, wreaks havoc a bit on this, on the planning. And we can't just pull a teacher out of our hat 2 days after school start. And I know that as well. So as much as people can say, have your child, July 15th, we're open, central enrollment's open all year round, and don't have that bottleneck three days before school starts, where everybody says, oh, I decided I'm gonna enroll my child today. That's what happens. And it makes, so if this doesn't flow, they'll watch this meeting on TV and say, well, I thought they had it all planned out. That is a huge barrier.
Continue. So, are there more? So this is the concluding slide?
This is the conclusion.
Okay.
Any questions?
Very
on this slide, I just want to really recap. Scott covered point 2. As an organization, we continue to plan for a diverse array of course offerings and still registering and scheduling students. We also will collectively continue to review and adjust our staffing, as we already talked about. And then we'll be shared with the Board of Education as student results, enrollments, and registrations evolve.
So we have a special meeting in 2 weeks. What I'm wondering is this, so we have, can we see we've seen the budget in several chapters. Can we see now the overview of what we've looked at that meeting?
The plan, and I think the last item that should be behind your thing is the budget timeline. Because according to the timeline that we talked, obviously we can make adjustments to that.
Well, in the time, and that's fine. So go ahead, why don't you?
So the original plan that's been presented was we would go through things, and then on next Tuesday, we would pull all that together for the initial presentation to the board. So if you would rather the finance committee see that, bring that all together first, we could.
I would, because I would.
Delay the 21st presentation.
Well, I would like to, because the plan was on here, assuming we would have seen that before. So we've seen it in pieces and parts, but I think we should see it all together first. That would be my preference. So then how does it affect the rest of the plan? Because the board will see, well, I mean, the Finance Committee should see, I think, the entire budget. So we have seen it in pieces and parts, and things, in the presentation zone, this is moving, this is not. I'd like to see it at that meeting on the 28th. And then we'll take it to the board at that first meeting in May.
Are you talking about the personnel budget?
No, I'm talking about the whole budget.
Well, that's just the general fund budget, because that's all we've gone through so far.
That's fine. But I think when we get into the 5-year, I don't know whether this helps or not, but in the 5-year forecast, we've got FY16 in there. And FY16 incorporates everything that we've been doing up to this point. Issues on the revenue side, issues on the expenditure side. Today, what I know as what FY16 will look like. And I was going to begin my comments about the 5-year forecast with A, it's a snapshot, B, it's a process, and we have 3 things that are pretty significant variables that are unknown at this point. Number one, and between now and July 1st, these will probably become knowns. Number one, we'll finish out fiscal 15. I mean, that would help. Am I close on my $4 or $5 million variance there? Number two, we'll finish up and you'll get presented a resolution for the appropriations resolution for 16 in June. That'll be done, and then hopefully the state budget will be done. So I can give you a snapshot. You've got it right here, a snapshot of what 16 looks like with all the staffing that we've talked about. And I'll go through what I've included in there. You'll see that right now. I don't know that that helps, or if this is really the format you want to see it.
This is the one you're saying we have 16?
That is correct.
Okay.
Yes. And that's a format of mine that I put together. So it changes to, I don't know if that helps you at all.
Well,
I mean,
well, no. Yes and no. Why don't we go through that and then, well, we need to talk some more. Because why don't we move to the forecast and discussion on the forecast. And then, pardon me?
You all set?
Yeah. Let's go to
There
discussion.
are two documents in your packet having to do with a, yes ma'am.
Can we thank Mr. Odom for his?
Oh, thank you.
Thank you, Mr. Odom.
Thank you.
So I'm going to go ahead and dismiss the program staff because I don't think it's relevant for them to sit here.
Thank you to the program staff. My apologies for my back for being here.
Oh, yeah. Goodbye. Thanks. Apparently I'm not. So the 5-year forecast, we'll walk through two documents. One is a single-page document in portrait layout. And this is one page of the forecast. Accompanying this is quite a bit of notes of the underlying assumptions and economic conditions and a lot of discussion. And while I've used that as background to prep for this, it's not in publishable form yet. We've got to go through and clean it up, and I knew full well that between, as a result of discussions here today and the 28th when we meet again, you may tell me to do something different. So behind all of this are very detailed calculations, which I didn't bring to present today. Part of it looks like, I don't know how many of you work with Excel spreadsheets, but it looks crazy because as I go through, I'm writing notes using comments all over. It looks like a Christmas tree with notes on it. But I could certainly call it up if we needed to look at it that deal. But there's a lot of detail behind all of these notes with assumptions about what happens to assessed value, what happens to the cap in state funding, what happens to tangible personal property reimbursement over time, what's going on in staffing. I think this had how many, 127 point something FTEs. In my number, I plugged in 130. So,
and some of those items, it would be helpful to include them in as footnotes, so that so that we have some background about what goes into the numbers.
Sure, and I'll have that complete narrative at that point. One of the issues was, because of what's been going on here lately and trying to get some of the latest data in, that narrative just isn't in a clean format to publish. So we'll get that done as long as we draw a line in the sand with changes. If you want me to, instead of what I've assumed about, say, the state foundation cap, you want a different number, we'll plug that in. But at some point, in order to generate the document and the notes, we're going to have to say, we're going to stop and we're going to go forward with this.
And understood. My concern is it's hard for us to know how to provide you the comments without having the background to make that evaluation. Because right now there's no way to evaluate all the numbers. So
Chair Hudson, would it be your preference that we delay this until you have that document? I mean, I mean, we have this part now, but if we're going to go through it again, when you have all of the deep detail, do you want to do it both times or not? It's your call.
Maybe if you want to, it's a very good point.
I think it's worth highlighting here. As I was just looking at it, there's two numbers that have gone up dramatically, and just understanding what the assumption is about that. It could be a very brief conversation with a lot more color.
So it may help, because what I do is I look at changes. And instead of the one page, if you go to the legal sheet, it's 2 pages. The first page compares what the forecast was in October and looking at the preliminary numbers that we put together for May and calculating those changes. The second page of this is actually a change in changes, year-to-year changes, and the changes in those year-to-year changes. Now, that may be a little bit too much, but for spreadsheet freaks like me, I like to look at that and go, I want to understand what those are. Earlier today, at various points in time, I understood what all they are. Whether or not I can recall them to you right now from memory is a whole other thing, but I do know highlights that I can share with you. First of all, from October to May, in terms of general property taxes, no significant changes there. Those variations are very, very minimal. Lines 1035 and 1040, unrestricted state grants and aid and restricted grants and aid. Collectively, I've always talked about them together because, as you can see, there has been a significant shift between those two lines. And that is simply a manifestation of the interaction of getting the current enrollment numbers into the calculation, the fact that we are capped, and when you prorate those numbers back out, it moves it from one line to the next. And net, that funding really doesn't change. Now, those numbers increase over time because I factored in a 5% increase to the cap. In the October forecast, I only forecasted a 1% increase in the cap. 2 proposals out there legislatively. One's the governor at 10%. One is the House bill at 7.5%. We picked 5. It's not that I don't care, but we have to pick a number. I thought 5 was reasonable. At some point when we know what it is, we'll plug in the real numbers and we can update the forecast. But at this point, I've put in 5.
Which line item was that? I'm sorry.
Pardon me?
Which line item?
Those are the line items 1.035 and 1.040.
And so you got a 5% increase. Which one? One looks like it's going down from 245 to 243, the unrestricted,
right?
35, and then the other one's going up $2 million, from 46 to 48. So kind of the net of those two is flat.
And then, pardon me? Oh, that's right. Thank you. There's another one. The 6.6 million is coming out next year. So that fiscal 15 to 16 numbers are, that change year to year is going to be off by that. That 6.6 really belongs in 16 and not 15, but we got it in 15. We got to pay it back in 16, so it causes that aberration. That's a cash flow issue.
But that's the way you also book it from others.
Yes. Yep. We have to.
You don't accrue it. You can't accrue it or reserve it.
Cash basis account. Okay. Unfortunately. You know, I don't know what happens in the cap room because
that's fine.
I don't know what happens there, but they may accrue that.
So what you have is this 5% increase minus the $6 million adjustment, which is not real.
Right. What other big changes did I notice? For instance, 1.060 other revenues, you'll see that it's dropped about $2.8 million across the board. That's simply to reflect fiscal 15 realities in that line. A lot of that was due to our assumptions about payments for in lieu of taxes and property tax arrangements where folks are paying us directly as a result of settling property tax cases. So I ratcheted that number down to reflect 15 results. As I said before, in the advances in line, I just ratcheted that back. Likewise, you'll see down in line 5.020 advances out, I ratcheted that down 10 million. Maybe it's a more realistic number, maybe it's not, but they offset one another. So from a cash balance standpoint, that's a wash.
Stan,
Yes, ma'am.
I didn't hear you. When you talked about legislation, House Bill 64, does that have any impact on these numbers?
It will. But we did not read that bill and put it in here. Likewise, we didn't read the governor's proposal and put it in here. The only thing that we have included, if you look at line, or not the only thing, but one of the things we've included, line 1.050, property tax allocation, included in there is the reimbursement that the state is paying us for the loss of tangible personal property tax. In the October forecast, we forecast that would continue, that we would get the reimbursement. It's now pretty, see the shaking of the head, it's now pretty clear that's going away. So we've taken it out, and as you can see, relative to our October forecast, it's dropped that number significantly in the out years.
And the win-win agreement?
Win-win is still in this. If it goes away, that's about $5 million a year that will come out of revenue in the future.
Where would that appear?
Win-win appears in 106 as well.
And do you want to explain that for the committee members?
If I totally understood it, I would. I was not around, and either fortunately or unfortunately, when Win-Win came into existence, I was with Worthington City Schools. We had a pre-existing annexation agreement with the Columbus City Schools, and we were exempt from those conversations.
There's a proposal in the legislature to do away with Win-Win, and the net result would be a loss of about $5 million a year to the district. Is that correct?
I would say the proposal is to codify the win-win agreement, so the agreement is no longer necessary and eliminates the need for the reimbursement to districts, because the net effect is the same with the exception of the financial impact. Is that another way of saying it, maybe?
From a financial standpoint, the net result
we lose $5 million. Yeah, there you go.
Well, and then it started about 20 years ago when Columbus was annexing land. 40 going north, you could buy a home and it's Columbus taxes, but another school district. It could be a Columbus address and another school district, and they would make Columbus City whole, and you would pay that price, but your students would go to, there's a win-win agreement for Worthington, for Westerville, for Hilliard, those places that are Columbus proper. But because you're in a win-win area, your child can attend a suburban district and not Columbus City. And a few years ago, one of those questions I asked was, have we looked at these payments? And we had to right-size them and bring them into a line, because we hadn't looked at it. We just passed the resolutions for a year, and then we right-sized it, and then people started looking at, is this still viable, or is it still relevant? And so now it's at the State House, and people are looking at it in terms of, is it still needed in whatever else they do at State House?
And that's it. I live in a neighborhood that's Columbus that was created after the win-win. So we're 8 miles from our school, and there's no, that's the closest school. So, and it's a growing area. So I'm sure there's areas, it's already a modular school at Gables. So I'm interested in seeing how, areas like us that are way out in the boonies that are still Columbus City and Columbus schools will be addressed.
Should go to the Senate Finance Committee.
Yeah, we can address that further maybe at the next meeting, because we'll have a little more, maybe some more information on the legislative detail. So I'll let you continue at the high points.
On the personnel side, the highlights are, if you can recall our discussion in executive session about staffing and some assumptions there. Those are incorporated herein.
What's these FTE ads?
Yes. First of all, the what I call the retire, resign, rehire factor differential. I put in 130 new, and then what I had, going out in the future, I think it's 35 new each year and 50 retire, resign, rehires. Whether or not that's a good number, who knows? There is nothing in here for that to be determined number from a personnel standpoint, and there's also not anything in the forecast yet for, as I mentioned to you before, the $6 million that I had in that was, I don't know what to call that, a buffer, but I take that out before I forecast into the future years, so $6 million doesn't become $30 million. It's just $6 million. As you might be able to tell, and this is interesting that we have a 5-year forecast, which is, in the history of school districts, a relatively new creature over the span of time. But school districts, we still, because of all the issues that drive us like enrollment, we still pretty much live year by year by year. I mean, the best data we have comes to us like right now, and we got to open, as you're describing, folks walk in August and we've got to make space for them in September. So we still are very much 1 year driven at a time. So when we look out 4 to 5 years, while we can make educated projections, it still adds to the potential for variance out there in the out years pretty good. So I don't have that in there, but if I do that, and if we want that buffer, I only put it in for 1 year at a time. I don't buffer years 2, 3, 4, 5. I don't recommend doing that. We could, but I don't recommend doing that. Again, this is to give you a sense of financially where we're headed, and to raise a hand, raise a flag when we need to modify our expenditure revenue behavior. That's essentially what this is intended to do. And as you can tell from the discussions we've had today, and this is just the tip of the iceberg, so to speak, with the level of detail and discussion that goes on as we prepare for the next fiscal year. But that's for 16. And I'm sitting in my corner office looking at 17, 18, and 19, making some reasonable assumptions and sharing them with you. So that's what's in the personnel number, the 130, the retire, rehire, resigns, factored in potential increases in healthcare costs. We don't have the Cadillac tax in here. We're just beginning to look at that. I've been told by some people, don't worry about it, it's not coming, they'll get rid of it, we've got a presidential election.
Yep.
Don't know.
Until it's gone, it needs to be in here. Just like TBD needs to be replaced with at least some reserve number, I think.
Okay, we'll do that. We'll come up with a number. We'll put a number on the Cadillac tax.
Right.
We'll factor that in.
Yeah.
I think what this is suggesting from what you put together is just that you've got till 18, and then from there you got to look at how to reload your coffers because you won't have enough in 19.
Well, not even 18, 17. You run too close. In 17.
I'm sorry. I missed one. So yeah,
16
17
is really.
And then Megan, you pushed up if you have the.
Let's not go there right now, please.
The
Cadillac tax.
Yeah, the timing of our behavioral response to this, keep in mind that this is a fiscal year number, and the taxes are collected on a calendar year basis. So if you want to affect the end of 18, you need to start collecting taxes in 17.
I got you.
Which means?
Which means if you want to start collecting taxes in 17, they have to be voted
in
16.
And so, but if we want to do that, and that's what we need more detail, I think, because folks need to understand where those changes come from, what drives them, and then how we get there. And that's why we really want this to snap out a lot more.
Right.
It's very important in this cycle that we do that, to start doing that.
Because is the enrollment really impacting primarily your unrestricted state grant aid? I mean, or is it restricted?
Neither. We're capped.
It's down there in purchase services, basically.
Yep. But what happens is it impacts our calculated state aid, but we're capped. We don't get it.
You're capped, but if we're sending money out in that purchase services to the charters, and you have less money.
For instance, let me there's a very good example of how this works. Our March number 1 payment, I can hand this out, but for sake of brevity, we can do this. Our March number 1 calculated payment was $303 million. We are capped at $275 million. So that means we're 28 million, what we refer to as into the cap. So along comes the new numbers. They do the recalculation. We jump from 303 calculated to 360 calculated. Another $57 million. Our cap number is 275. We're now not 28 million into the cap. We are 85 million into the cap. Doesn't do us any good revenue side. But what happened to our deduct for all the children leaving the school district on school choice?
That's growing.
It jumped. Now, it jumped. All those, and this isn't, but 17 million, 20 million, somewhere in that vicinity, 17, 20 million, that deduct increased. This is data that you can pull from the state. I just go to the State Department, and that's our source. Some of this is netted. You have to be real careful when you use this, because there are, like open enrollment, there's open enrollment positive, open enrollment negative, and on this report they add them together. But when I have to book it, show it on a report like this, one's revenue, one's expense. Right. So that's why I pull them out. But that's a very good example of why at 7 a.m. in the morning, when a fellow of 3 seats from me pulled up the foundation report, texted me, and said, community schools is up. And it's 2 days of meetings and conversations and phone calls about, you know, what's going on, not only from an annual cost standpoint, but also that 6 points. How's it get funded? It was very much, you know, pulled me off of this task onto that task. Okay.
And is that reflected in the 5-year forecast? Like, if we make an adjustment in our numbers for 15, then that?
Yes, yes.
Okay.
So I changed the deducts, and that's reflected in the purchase services line. You'll see in 15, the change from the forecast is up 17. It's up 23 million in 16. It's up 26 million in 17, 28.5 million in 18.
Yep.
Okay?
So why don't we...
Not all of it's attributed to that, because we also have, as you recall, we talked about the non-personnel budget. We were about 4.2 million running ahead of our October 16 line. So we've factored that into those numbers as well, along with inflationary increases of anywhere from 1% to 3% on line items, albeit somewhat arbitrary, but something to build in from an inflationary standpoint on the non-personnel side.
So I think at this point, and given the time, et cetera, for the 28th, my sense is at least on, so we'll work backwards on the forecast. We'd like to see, some detail on the assumptions that go into some of the figures, so that the committee can help evaluate some of that and provide comment. Would there be anything else, any of that, or highlight?
Yeah. So it starts for me with if this current forecast, if it's reflective of what we needed to have in it, going from 125 to 88, so your deficit spending for the period, and then that deficit continues. How do we feel about that? Because you've got expenses that are being added some are, again, compliant in order to achieve compliance, some are programmatic, some are enrollment. And so the ones that seem discretionary are those that are programmatic, and going through a prioritization, is that what you accept, or what is the parameters? How much of a deficit do we feel comfortable supporting, right? And so you may not be able to do all the programmatic if you don't feel like we can support that kind of deficit spending. So
I guess that begs the question, at what part of the process does the Finance Advisory Committee become involved? We've gone through that exercise already. We had the Cadillac version of programs and potential enrollment and those things that exceeded what was mandated, and we've pared back and pared back and pared back. So is it your thinking then that we need to take a look at that again and maybe make yet further adjustments in program? Because what we brought forward is basically what we say we need to maintain our momentum toward excellence and achieving those goals. And we made some pretty significant reductions, I mean, in program and personnel, associated personnel.
Do you still have the slides that were presented to us? If you can go back to that one that was 5 columns, that's it. So I like Tim's suggestion to take this and to add for the 5 years, the full-time equivalents and the enrollment numbers, so we have it all on one chart. And I think, I think having that big picture is going to help the Finance Committee more than all the detail, I guess.
But that's a detail I was referring to. I mean, it's breaking down. So instead of having one number that's personnel services, it's broken down so we understand where the variances are in those areas. So it would be, from the slides, and you've got, here's where we're adding one, here you have the various categories of what you're adding, but it would be, here we've got, this number includes X number of FTEs, and you'll see the variation is 1. Y number, I mean, there are different numbers, but they have expense numbers associated. So all the slides we saw, each one of those has an expense number associated with it. But my frustration is that as we go through this, we only see then an aggregate, and we don't see those expense numbers, and so we don't see the expense variation, and so it's really hard to evaluate that when we're just seeing these sort of broad concepts of what they are. At least that's where I am. So
I hear you. I mean, no, we don't want you to be frustrated. We just want to make certain we take the time beforehand to produce what's meaningful and helps with that education and decision-making process. It's not our intent to withhold information or not provide appropriate levels of detail or represent it. I do too. I feel bad though that there's a level of frustration. Because I know we've done a lot of work preparing for this, and I'm thinking, okay, we missed the mark, I guess, so we need to figure out how to do it right.
If I can make an observation, you're the largest district in the state, so I mean, it's $1 billion, so you're going to have some blocks that you're working towards, right? My observation is that you have some predictable revenue line items that don't need to be tweaked. I mean, I think what you assess, you've got a pretty good track record as to how it's going to continue to trend. I think there are some areas where some of the processes and metrics you put in place are going to help you understand performance management, to understand staffing levels, to understand performance of your teachers and things of that nature. My assessment is that you're probably going to find you got some fat. Now, how you deal with it may be contractually based on your union contract and what provisions you have to address it that way. For non-union, that's more emotional, but you can work through that. The long-term view is how you go back and have a report card if you're trying to go after more money, and that gets back to your bleeding with regard to people going to charter school. So that's a performance issue about what you're offering versus what they're offering. If you're McDonald's and they're Chipotle, why do they keep going to Chipotle? That's just, because pretty soon they're not going to keep going to McDonald's. I mean, it's just, that's one observation, it's my observation. So part of it is to understand that if in the short run that's not something that can be readily addressed, it's still bleeding. So you have to understand how much blood you're losing so that you model and make sure you have the ability to absorb it, and that gives you direction to go out and ask for more money. But you can talk about all the things that you've done and the path you're heading down, but you can size it so you get enough money so you can reload your coffers. It's my little cursory observation. So for me, it'd be helpful just to understand that component, because I think that's really where you're guiding and monitoring every day is that enrollment level. And the chart we saw was very helpful. But what I kept seeing by classroom is it kept going down for our schools. And so, I mean, that's certainly an area we can work on. I think we have a great product, but my larger question is, with that product, if it's that good, what's wrong? Why, you know, and that's maybe beyond our reach.
I will add just to there's probably just a little bit. It is a lot of the state law changes with some of the voucher dollars and the school choice dollars, right. The expansion of programs. You see it almost annually. So that, you know, at one point there was some, I think, performance indicators and things like that were related to how dollars were doled out. Some of those things were expanded. So I think there is some of that. It could probably have its own sort of class on discussing this, but I think we do want to keep that in mind too.
And I think there's another distinction. If I see if I can, one is, and I think going back to Tim's comment, I think there's a difference between not judging the programmatic value to Dr. Good. I don't think that's our role here, but I think it's about is this presentation. Because we have so many of the figures here are all top line figures, it's hard to really evaluate it's difficult to evaluate, do those projections make sense? Do the figures, are they justified? Is this an appropriate presentation? But a budget, at the end of the day, a budget tells a story about what we're doing. And I think over the last course of these the meetings, we've reviewed various budget elements. You have told a great story, and there's a lot of story there about where we're redirecting resources, where we're reducing expense, what else we need to do, where we're making new investments. So at the end of the day, though, we need to have it all in one place and in one document that has enough detail, not just the top lines, to tell that story in figures. And that's what I think, what I'd like for us to have on the 28th. And then to the treasurer's forecast, I think the same thing. There were a number of assumptions that you described, and they make sense, I think, to us sitting here, but I want to make sure that the document stands on its own and tells the story. So that's where having that additional detail, whether it's in footnotes or by, you know, other sub-elements that make up that aggregate number, are included in here. So that's what I would look for in what's presented on the 28th.
What would help me as you're preparing this would be to have those footnotes there, and if you included your budget assumptions, I agree with you, Board Member Hudson, that would be helpful. And to your point, Mr. Robertson, about that data, I think that would be good. I just realized I'm about to listen to my 17th forecast, 5-year forecast, you know, and I've seen it in many different formats. But what helps once it gets to the board table is for you to answer both the big questions and then why this. So we are now and very happy to be in value-based budgeting. So we value gifted, we value our expenses because we voted to do it. And so connecting just how much it costs makes sense to me, as you say, and just say, you know, this is what we know it's going to be. But I can read the year-by-year change, I think, but just making sure we can answer those questions, as you say, to the community. This is what we need, this is what we want, and this is why. I don't think we are going to get dinged, and as you can see what Mr. Odom presented over time, we've made significant amount of cuts. And they have both been efficient and prudent. However, there was an expense to that as well. And for some of it, programmatically, we haven't provided programmatically the choice for some parents. So if you can just highlight, and you talk about how providing the gifted program is preventing them from going to some of the other, I don't know if you know, for example, on the charter movement, which I was asking Dr. Klein to add, the Metro school, which used to be all 16 districts, but primarily Columbus City, and now more and more students from the suburban districts are going, they opened a middle school. That's a huge competitor, because their program, which we helped develop, by the way, is now more competitive. So when you look at that number in middle school, oh yeah, they're drawing, but now we're about to open a 3-8 for gifted students. So now we can counteract and offer those parents a highly interactive or a more conducive program. But it's those things that you connect the dot to the money, to what we're doing programmatically, to what you're asking. You know, seeing that in the big picture, this is how much it's going to cost, but over time, in terms of not losing students, we anticipate it's going to have to dissipate. Like, that's the story you can tell me in whatever format, high or low, give me the numbers and tell me where the surprises are going to be, or you anticipate whether this is a TBD and this is our conservative number, but this will change. And as a board member, what I appreciate is you tell me what may change, and I'm never surprised by what the State House does at this point, but I want to know that you know and that we have a plan for it. We have a plan A, B, and C to address it.
So, yes, one last comment.
I'll echo that this is our 5th meeting, and we consistently talk about community schools and, you know, the unknowns around them and the revenues and expenses. So if I get nothing else out of being on this committee, you know, by our 10th meeting, I hope that we have an understanding of how they affect the budget and what we can do, because that is an area that we can actually put a plan in place to bring some of those students back in. But it feels like we haven't addressed it significantly because we keep talking about it.
Well, and we still have, there's a lot to learn and a lot to get our arms around. I think just
we'll get there.
And I'll just share, the goal here is my goal certainly is to make sure that there's greater public understanding of what goes into this very, very complex budget. And I say that to make sure, and that this is not a process that is typical for public schools, but that doesn't mean we can't get there. So we're en route, and I know the staff, I want to thank the staff because both the treasurer staff and the budget staff, I know everyone has worked very, very hard on this. So we've just got a few more yards to go to get to that, you know, the next first down. So it's very important that we make sure this tells the story. So we publicly are telling the story. So we're getting there.
Yeah, I would say, I know you're trying to close up here, but there's a narrative here that says you've got a structural issue, which is you keep getting more dollars taken out of the system, not just because more kids are moving out, but the tax is increasing. The amount that you have to pay those other schools is going out. So you've got a structural issue. You've been very prudent in the resources that you've added to, and you know, the $4 million on non-personnel, you whittled down to a very, I think, prudent number. And so articulating what that represents in terms of improvement, and then on the personnel side, it seems like you've got a bucket that is, again, these are the things we need to do from a compliant perspective. This is what we need because of activity. And there's a very small amount, but it's very important programmatic. So articulating that story is, I think, is really important from a presentation for us to be able to communicate and opine on. And so I think that's the narrative I see.
So we'll return on the 28th, if that works for everybody. Hopefully it'll work for Jesse. Yeah.
Just to make sure, I want to make sure we're all clear on this. We're going to pull the budget presentation off the board meeting for Tuesday, correct?
I would ask that we do, yes. And I'll let President Baker know.
And the piece that I'm looking for some feedback on, because I know how far this can go when we're getting into some of those layers down. We're going to need some assistance and direction on how far we go. I mean, we can go so far in the weeds. It's just some parameters that we get from here.
What I would ask is,
what
I would ask is, why don't the three of us have a call on Monday? Or let's do a call either on Friday or tomorrow's Friday. Since tomorrow's Friday, let's do a call on Monday to talk through some of that.
Because Mayor Jarrell, also, if we pulled it off for the 21st, that only gives us 2 meetings to approve it in time for the main meeting.
But it's not ready yet. It is not ready yet. Okay. It needs to come through here, and it's just not ready yet.
Okay. So,
I mean, there were things that I thought we would see today that we did not see today.
When you
we have this.
Send that in an email. I know what you're saying, but I also know that the same way we just went into it, and they're going to pull it back, and it's going to work, and it's going to work for us. we also have for the colleagues that need to see it, and we need to see it in time for 2 meetings.
Well, we could also invite them to the meeting on the 28th.
Yeah, but if they can't make it, because that's not their responsibility to come on the 20th, they may not have that scheduled, but for the board to review it, they're not going to want to review it the first time they see it either. So they need to have it in May at the first meeting.
They're going to need to
have to be approved by May.
You're talking about the 5-year forecast and the budget presentation.
The forecast will be.
We have time.
Forecast has to be approved
I'm talking about the
May.
forecast.
Well, forecast, we're moving forward at a regular time. We're talking about the budget presentation.
I just wanted to make sure we're clear, like we're
The budget
pushing it back. And I'm like,
No, not the forecast.
You have 4 more regular board meetings after the Tuesday.
This document here and the notes that go along with it, what you see on the 28th is what's moving forward in May. So hopefully, unless you've heard something about those, very macro level factors, for instance, state budget, 5% cap?
We're not going to know any.
But I mean, what I put in here, I don't want to come into on the 28th, I don't think we're going to have a budget bill, and maybe there'll be some changes, and I put in 5. And for some reason you say, well, let's make it 2. I mean, at some point don't we have to stop and adopt something?
This is again,
and then
there's,
come back?
Stan, the problem is that you rattle off all these, like a lot of those assumptions and what's in here, like, we don't know what that is because it's not detailed. It's not detailed on these
Well,
pages.
you'll get detail on the 28th after this conversation.
Yes. So
we can't opine on it, I think is what you're saying.
Yeah, we're not opining on it now. So when you held that up, I mean, I don't want this to go forward until after the 28th. So I would say that's fine if this is where we are, but once we have the detail, we'll review the detail and then say whether or not, if we're comfortable with it going forward.
We're meeting the 21st, aren't we, to go over the 5-year forecast as well?
The 28th.
21st is the board meeting.
That's not what this says.
No, the 21st is the board meeting. Well, I know, they were going to, it was on there.
Okay.
We were going to present it.
Okay.
That's what she's saying, that's why.
But it's not,
That's the budget.
That's what we're going to push that back. So that'll go to the 5th. That'll be the budget will go to the 5th.
And Stanley, you can only make an educated guess on the state, but we need to make an assumption and say this is what we're going with and move forward. And it may change, but we have to sort of choose one, and that's what's going to be presented to the board and eventually the public. Right?
Because that's the unscientific nature of the state set up the
Yeah,
system.
it isn't meant to be, but again, it's just about presenting with the additional detail. So I think we need to adjourn. So can I entertain a motion and a second?
Second.
All in favor?
Aye.
Any opposed? Thank you very much.